Good afternoon, Clark Neighbors with BIS Commodities in Cedar Rapids with recap ending May 22nd. In general, kind of a negative week in the markets, in the grains that is, and a fair amount of this could stem from weakness in the dollar this week, with the dollar up, strengthened the dollar with the dollar about 3 points, putting pressure on a lot of commodities, led by the crude market down 75 cents to a dollar, corn down 5 or 6 cents on the week, beans down 28. Wheat was the sole beneficiary to the upside this week on the grains, with about a 4-cent positive move on the wheat. The wheat market, we've seen some short covering this week, along with after last week's short covering also, and weather conditions or concerns in the southern plains because of the big amounts of rain that they've seen during the month of May, and a lot of Texas, Oklahoma, Kansas, and so on. As far as corn's concerned, fairly negative week. Not only did the board struggle in most cases, basis has see some pressure also due to movement. Many bases or bids involving basis are down like 3 to 6 cents on the week, along with the board being down about a nickel. Movement is picking up and talking to contacts in the country. Not at a pace that it may need to, but the concern of the massive amounts of on-farm storage that may have to move at some point has the market nervous going forward into the summertime. As far as July futures, once again testing the support in this 360 area. Interestingly enough, over the last 30 days, July corn has not closed below 360 and not closed above 370. So very tight, boring trading range right now in the corn market. We'll see how that plays going forward. Next Tuesday we have crop conditions and also a planting update. In the majority of cases, corn crop should be in by the end of the weekend. And conditions, some analysts or some people in the trade are looking for the crop conditions for that first report of the year to potentially be the best good to excellent rating we've seen. Sales have been better here from an export standpoint over the last 30 days. They've been decent. Export side has been okay. Ethanol margins good, keeping ethanol demand pretty solid. The key is going forward is, do we see growth in any of those sectors? Obviously the feed sector is having some issues with the bird flu in the western states, or mainly in the western part of the U.S., and I'll talk more on that in the beans in just a second. Soybeans, that's where the pressure has been this week. In some cases, many look at the soybeans as it's about time to some degree based on supply and demand. With USDA coming out a week and a half or 2 weeks ago with 500 million bushel carryout for this upcoming crop, and a world ending stocks number that is a record large. The bean market went to new levels. November took out 940 recently, which looked like support, has now taken out the contract lows from last fall. And keep in mind, even though we're testing contract lows in all the beans right now, November soybeans, I think only 1 week going back to 2012 at any time have been below $9, and we're knocking on that door here this afternoon. Basis is interesting in the beans, and that's a dynamic where the eastern processor, where we're seeing basis levels at 30 and 35 over the July, is much different than basis levels in the West, where basis might be anywhere from 20 under to 10 over, depending on locations. Western basis is having issues because of a bigger supply of beans that's available. Secondly, because of the bird flu and the lack of demand for meal in that sector is having some impact. While in the East is still stemming from a long tail of trying to fill that pipeline that was so tight last fall. Really good export sales so far this year that have come mainly through the river locations, Illinois River and so on. So the raw supply of beans in the east is a little diminished versus the west, so it's the market's responsibility to try to get those beans to move. Also with new contract lows, and the market is inverted, whereas the front end of the market is higher than the back end of the market. It's very rare with supply and demand issues that we have. It's very rare when you're making new contract lows you can talk about that, but we are because of that strong basis in the east, namely being on top of the delivery market. National Weather Service came out today with a 30 and 90 day forecast, if you will. And in general, for 30 days and 90 days, temperatures in most of the growing areas of the Midwest and the Plains talk about normal to below normal temps and normal to above normal precip, depending on what part you're looking at. So that is a very broad outlook. We'll see if that holds true, but if so, with this crop off to a wonderful start, a large crop could be in the works, but a lot of water to go under the bridge in the meantime. In the last week or two here in the office with this stagnant to lowering market, we've had lots of questions in regards to the grain markets especially, and what type of cash contracts, what to do in regards to basis. And it seems like producers are having a tough time making decisions right now. So if you'd like any help or any to just visit on what your needs are, what you need to move, feel free to call and visit. Talk one-on-one with one of the brokers in here and help you with that marketing process, because in many cases it seems like producers are a little unsure what to do at this point because of price, because of maybe what kind of supply they have at home, what it looks like going forward, and now with the new crop planted, it only adds to that dilemma. So again, feel free to call and visit with us on that. Cattle on feed report came in this morning, actually during the trading session. On feed came in at 101. Trade was looking at 101.7, fairly neutral. The placement number at 95%. Trade was looking at 102.4. Now that lower placement number may stem from the rains in the southern plains, which has helped with conditions of grassland in those areas, and we may be seeing cattle stay on grass a little longer versus being placed into the feedlot. Something to watch going forward. Marketing's at 92%, pretty much in line with what the trade was looking for. So all in all, market fairly quiet. Continued pressure. Funds are short, the corn and the wheat. Haven't seen commitment to traders report yet this afternoon. Assuming we saw some new shorts come into the bean market this week, I think that's one key thing to watch going forward. If for some reason there's a short covering pop in this market, producers need to be aware of that for marketing situations. Basis continues to be weak in the corn, strong in the east, as we mentioned. We wish everyone a safe and very meaningful Memorial Day. I mean, in this country, we're very blessed to have all that have fought the battle and in many cases given their lives, so we need to recognize them, and everyone have a safe Memorial Day weekend. If you have any questions, feel free to call us, 800-373-2525 or BIS Commodities.